Hey, what is going on, everybody? Welcome to another episode of the Rapid Review. So indexes making all-time highs, but overall, things don't feel as strong as they were and as broad-based as they were. So we're going to look at everything that went on this week in the overall market and get everybody to trade for next week. So without further ado, let's get started. All right. So, a little disclaimer there. This is not investment advice. It's for educational purposes only. Take a read of that, and let's get started. All right. So we are in an uptrend. The power trend is still on, which is very, very positive. And in terms of distribution day, the S&P, we're going to take 1 second. Just make sure we're back connected. Stand by, everybody. All right. Yep, we're all connected. Sorry about that. And when we look over at the distribution days, so you're going to see slightly different than IBD. The reason being, IBD did not show the Monday distribution day as counting, whereas I am showing that as counting. I showed higher volume, looked at a couple different sources, showed higher volume. Know they have some stuff going on with their data providers. So I just went with the multiple sources that I was using, which counted Monday as distribution day and also counted Friday as distribution day, giving us 2 distribution days added on the S&P. But they also lost 1 distribution day on Monday. And that would bring, so it was a loss 1, gain 1 on Monday, gain 1 on Friday, bringing us to a total of 6. The NASDAQ lost the 7/15 distribution day due to price action. And then that brought the 7/31 pending stalling day into play, which kept us at 2. And then we added the 1 on Friday, making this a total of 3 distribution days that we have added. So in terms of the whole stalling day thing, if you don't understand that, look into IBD Market School. But in general, the rule is you cannot have the same number of stalling days as you have distribution days. And if that occurs, then you just have it pending. So what we had with the day dropping off the 15th, that was a stalling day, which then dropped the count on stalling days, reactivating a new one, which is the 7/31 stalling day. Again, 3 and 6. Overall, looking at these distribution days, we are seeing some piling in on the S&P. The NASDAQ, nothing too concerning. But to me, this is all secondary indicators. The real thing that I'm looking at is the price action, how we're maintaining on key levels. And that's why we'll be going through the charts in a little bit. In terms of the week, the S&P was the second place for the week, up 0.94%. NASDAQ, the laggard for the week, up 0.81%. And the Dow, leading out the week, up 1.74%. As everybody's been talking, it's just kind of like the rotation that we're seeing in this really strong long-term uptrend. You do expect some rotation to kind of jump in there. So that seems to be what we got this week. And for the year, the S&P was up 9.66%, NASDAQ up 11.97%, and the Dow up 5.65% for the year. All right, moving averages. So still green on every single moving average, which is positive action. We did pull a little bit closer into the 10 and the 21 on the NASDAQ and the S&P, as we'll see on the charts. But everything is looking completely fine. We're not super extended from any of these averages, so nothing too concerning here in terms of being too far extended. We're above all of them, which is a positive sign. So all good stuff on the moving averages. So let's jump over and take a look at what's actually going on with the chart. We'll start off as we always do with the NASDAQ. And as I always say, feel free for anybody watching right now, drop any questions, comments, concerns, anything that you maybe disagree with what I'm saying. I'm all ears, so definitely chime in. All right, so looking at the week, we had a pretty lackluster start on Monday. We looked like we were trying to get above this Tuesday, July 31st high, intraday high, where we gapped up to, and we broke higher and then reversed. And this is the second time we kind of got rejected at this level. So it started off looking pretty doom and gloom to see us break and then roll back down. Not what we wanted to see, but then we completely followed up on Tuesday to bounce and break above those levels, though it was on lower volume, which is something to take note of. And then kind of for the rest of the week was honestly pretty boring. We gapped up and then we kind of just slowly trended downwards. We actually traded in these Wednesday, Thursday, Friday. The closing range between these 3 days was under 0.5%. So just slightly kind of falling downwards, tightening up. Volume kind of peaked and then rolled back down. So, um, is it ideally what we want to see happen? No. Is this super alarming that we are just kind of stalling around these levels? No. Obviously you want to see the market keep going up as a bull, but what I'm thinking too is with the long-term uptrend that we've had, with how little of pullbacks we've had, and with how quick and rapid it was, basically a 2 day pullback that we got 2 weeks ago. And then we kind of rebounded right from there. To kind of stall and not just keep ripping higher is actually pretty healthy action. Giving ourselves a chance to things to just digest as we kind of start to go towards new highs. There's nothing wrong with that. The moving averages are getting up even tighter to where we are right now, which is always good. So yeah, I don't see anything extremely alarming as what is going on with the Nasdaq. Again, boring week, but we're not in trading for entertainment. We're in trading to make money. So in terms of key levels, though, all-time highs on the upside, that's really what we're looking for. If we just continue to keep making those all-time highs, that's a positive sign on the upside. On the downside, the main key important level that I always look at is the 21-day EMA, but obviously also keeping an eye on the 10-day simple. And then one of the things that you'll notice too is, which is a really, really key level on the downside, is the prior low from August 1st. And our 50-day simple moving average is kind of pulling right into that same price level. So that's going to become if we do pull back and we do break these moving averages, this area and the 50 coinciding in that same spot is going to be really, really important in terms of this overall uptrend. So really keep an eye on that if we do get into that area and it comes into play. We'll look at the weekly. And on the weekly, look, we closed in the upper half for the week. 60% closing range, which is positive. Volume was a little higher than last week, as you can see here. But yeah, nothing more to note there. I mean, look, this thing has been ripping higher all the way since the beginning of April. So having a boring week, nothing too concerning. We'll look at the S&P, but to be completely honest, there really isn't much more else to say. It's pretty much the same exact action, maybe a little bit more strength because we had an up day in there mixed in there, but then we had some distribution. I mean, really, honestly, it's basically the exact same thing. We're looking at all-time highs on the upside. We're looking at the same moving averages, same prior lows. Here on this low, the 50 is actually already above where that prior low is, so that kind of coming into play first, and then that prior low. And then here you have like kind of the weekly. Just take a look at there. So like I said, any questions, concerns, comments, throw them in the chat. I'll give you guys a shout out. But let's jump over and take a look at what is going on in the theme tracker. So this is Deepvue theme tracker. If you don't know, I'm a Deepvue partner. This is the tool that I use for all of my screening, all of my scans, where I basically make all my decisions on my charts, fundamentals, everything. This is the tool that does the brunt of my work and makes my job a lot easier because it's very, very efficient at getting all this done. One of the things I love here is this theme tracker. So we're looking from left to right today, which was Friday, 1 week, 1 month, and year to date, what these industry groups and these themes are doing. And the big thing to note this week, solar. Solar saw a lot of strength this week, and Friday and this week. And then we're actually starting to see it climb up on the 1 month tracker as well. So we had talked about this let's say almost like maybe a month ago, that we were possibly getting the beginning of a stage 2 uptrend with the solar industry, but it was a little too early to tell if this was going to be, a good bounce off a bottom, or if it was just a little bit of of strength going into maybe going a little lower from there. But now it's looking like it's confirmed stage 2 uptrend. So definitely keep an eye on this industry and if there's any stocks that come into play. Casinos has been another industry we've entertained a lot, and you can see they were really, really strong on Friday, but kind of lagged out over the week. And other thing to note, home construction. I know a lot of you probably be seeing different stocks that fall into this category falling into your screeners. And not only did it have some strength this week, but we also saw that it is now at the leader in the 1-1 time frame, bouncing out those gold and silver miners, which have been just crushing it for the whole year. You can see that year to date over here. Growth was kind of flat for the week, but again, we were talking about the rotation that we saw this week, so not surprised to see that pop up. Bitcoin, not really up in the top of ranks for the week, so no surprise there that was doing very, very well, and we're seeing some of that rotation. Semiconductors, though, definitely did fairly well considering that we were talking about this rotation out of what was stronger prior. This is still holding up really, really well. So, but yeah, there's a quick look at what is going on with the theme tracker. So the next thing I like to talk about is just overall exposure levels. Look, this is a market you could still 100% be invested in, 100%. Double 100%. But it's okay as long as your stocks are acting well. I wouldn't be jumping into a ton of new positions, especially in some of these growth names, if this kind of rotation is going to keep continuing. But if you have trades that are winning stocks, if you're in some of these leading stocks and they're behaving well, there is no reason to jump out of those names. A lot of the names that I'm watching are staying above the 10 and the 21-day moving average, and they're pulling back, but they're doing so in a way that is just normal kind of action as the stock trends upwards. So if you have a ton of stocks in your portfolio that are doing that, there is no reason to go running. Now, if you do want to say, I'm just feeling a little not uncomfortable staying in this market 100%, and you want to maybe trim a little bit off of those to reduce some exposure, I can completely understand that, but I don't see any real true signs in the market right now that are telling me that it is 100% time to start going into cash. I will say that it isn't like the type of action that we want to see, that we're not shooting through these roofs and stuff and just keep going higher and higher and higher. So if we do roll over from here and we do start to go down towards that prior low, then I'm going to get a little bit more concerned. But until that happens, I'm not looking to jump in any direction. This was, like I said, really kind of a boring week, and it's a little more of just a wait and see type of week for me. So one of the things I've been doing, and we'll jump back over to Deepvue. Been bringing up a couple stocks. So for everybody that's in the chat, if you want any tickers looked at, we'll bring up some charts and talk about those tickers. So make sure we're doing good in live stream. Everything's all good. All right, cool. All right, let's go. So the first one I wanted to start off with is Micron Technologies. So this stock, if we're looking at this on a daily right now, you can see earnings, seeing a lot of acceleration on the quarterly basis, annually looking strong, sales looking strong. Deepvue does have those composite ratings and all the stuff that everybody's used to with different types of ratings, 99 being the best, and seeing all those 90s in there, really, really positive. RS and relative strength kind of not the best. And then we also see there's a lot of institutional sponsorship coming into this stock, though the last quarter did dip a little bit. So it does look like it might have paused. But overall, I'd say this stock is something worth taking a note of. What I'm seeing here is just kind of your textbook cup with handle, right? We had this big run up over here, and we've kind of corrected, slowly wedged down. Then we paused down here and kind of came to the top. If in terms of the depth of the base, we're looking at 20, almost 21% depth of the base. So perfect in terms of depth, not too deep. And then we have the handle, which was right below all times highs, dropping about 7%. And you can see that happening on lower volume. So positive to see this type of pattern where it's, cup, handle. We got back above all the moving averages. We're seeing the 10, the 21 getting back above the 50. The 10, the 21, the 50 are all, look at that. We have 117.83 for the 10, 117.44 for the 50, and 117.15 for the 21 EMA. They are all within basically pennies of each other. So another really nice thing to see here. Relative strength has perked up, which is positive. So I think for me, keeping an eye on this is, boom, right there, 128.55 with the classic cup with handle breakout. If this does keep trending and maybe presents an alternative entry, you can look at that, maybe a bounce off these moving averages for anybody who likes to maybe more swing trade. But that's, I think, the textbook CANSLIM type of breakout. If you are looking for those couple handle breakouts, 128.55, and I'm definitely going to be keeping an eye on this one. The next one that I did want to bring up, Reddit. Not saying this is buyable, but something I just wanted to entertain really quickly because of the fact that people have been talking about this one because of the move that it's made, and it's been massive and it's been super strong and is clearly outperforming the market. Ideally, originally was hoping that as we got to this prior high from February 10th, that we saw this kind of stall out over here, maybe give us some tightness, maybe possibly a handle, some sort of correction, but you don't always get what you want. And this thing is just continuing higher and higher and higher and higher. Volume starting to dry up, which is something that I have been taking a note of, but then it started picking up again. So look, this is just going to be a be patient type of stock, right? Earlier in its IPO and earlier in its life cycle, that it's only been just IPO'd in March of 2024. So this will give another opportunity to enter. If this is going to go on a big run, there will be some sort of point where this stalls and creates an entry. So just be patient. Don't chase this because you may find yourself buying right here, being like, all right, I just got to get in now, and then that correction comes, and nobody knows how deep that correction is going to be. So keep an eye on that. The next stock that I wanted to mention is Amer Sports. I've been watching this one for a while. This had a huge move off the bottoms over here. If you go even just from April to right here, 82.81% move, just ripped higher, super vertical. And then once it kind of got here, it's been trading in this pretty tight range. You can actually see that from peak to trough, we're at 11.23% flat base. So seeing this huge run up, seeing this act super tight for what is a very long period of time, seeing all these moving averages compress, and it really respecting those prior lows, especially right here where it kind of pulled back, and then we could see that one day, which was August 1st, when the market corrected, it really respected that price level. Really keeping an eye on this one now. Keep in mind, we do have earnings coming up. So this might be an earnings reaction that gives us the catalyst to break higher. But this is the type of pattern that I've really been watching because we've seen that a lot of these longer term flat type of patterns have done fairly well. If you even look at Reddit, if I could type, Reddit, not as longer term, but Reddit had that flat type of pattern. And there's a couple other names out there that have had that real flat pattern and then broken higher. Right. Another name. Let me just check. So this was brought up in the Discord channel. Shout out to Chad. You have AeroVironment. So first time I'm kind of taking an in-depth look at this, but he had mentioned this one. So all right, we're looking at the daily. I normally like to start by looking at the weekly. I can see you have this big run up, and I can see we're correcting. And just from first glance, this is telling me this isn't ready yet. But let's go jump into the daily. And yeah, I would say the same thing. This is downtrending right now. It is finding support at the 50, which is positive. But I really would like to see, more constructive kind of base building around here. So it's good. We had a big run up. That's positive. We corrected, bounced back up. We've kind of now started to roll over again. We're back below the 10, the 21-day moving average. It looks like we might be finding support at the 50 above the prior low. But this is just way too soon to want to put money into anything. I mean, right now we're looking at 16.64% from the prior highs. Yeah. So in terms of this one, this is a wait and see. On the fundamental side, I personally like to see a little bit, I guess we're seeing overall good on the average on the quarterly. Annual is kind of choppy all over the place. Sales are okay, nothing to write home about. We are somewhat seeing an overall increase in fund sponsorship. And then, your trustee ratings, your composite ratings look pretty good. Your EPS ain't that great. Your sales is all right. Accumulation distribution is all right. So yeah, in terms of this one, this is more of a, let's be patient, let's wait and see, and give it some time to form a more constructive pattern before we jump in on this one. So shout out to Chad over on Discord for shooting this one over to me and asking for what I thought. All right. Other than that, so final thoughts. Look, like I said, this is a boring week in the market. There are times where you're just going to have to be patient. You're just going to have to remain calm. It's not like trading's supposed to be this high action, exciting thing all the time. Things don't just fly up or fly down. There are going to be weeks where we have this, more choppy, more sideways, more flat action, especially talking about how the last 3 days of the week went. So remove the emotions, just get in there, do the work, have a plan, be patient, and don't chase. That's the biggest thing I'll say. Do not chase. Reddit is a prime example. These stocks that are ripping and you just wish you were in them. You're just like kicking yourself like I am because I had a position, and if I would have probably just not got stopped out on the first, I would have had plenty of a cushion to hold into earnings. But still, I'm not going to chase that name. I'm not going to kind of revenge trade and try to get back into it because that never fares well long term as a trader. Other than that, appreciate everybody for joining. Sorry if there was a little bit of a kind of mix up in the beginning with my internet. But there you go, YouTube. So you can watch a replay if you jumped in or later. And this will also be replayed on X as well. In the YouTube link, I have a link in the description for the Discord channel. Over 1,000 CANSLIM style traders, mini swing traders, everybody kind of trading growth stocks. So over 1,000 people in there, really, really great community, and shout out to those people. And then if you're on X, you can just shoot me a DM. I'll send you the link. Email, if you want to email me, it's over there. But yeah, as always, enjoy doing these every week. Hopefully this was helpful for you guys. And yeah, don't hesitate to reach out. That's all I got.